Hi everyone, today I'm talking about stocks versus property investments. Something I've been wanting to do for a while, but I've just not really had the time to actually do this video. Before I start doing the video, I think it would be best for me to say what's what in my portfolio. So at the moment, as you probably know, I've got about 5 stocks that I have open at the moment, shares in companies. Property investments wise, I've never really said this on this channel, but I actually do own 2 properties that I rent out, which I actually purchased last year. So those are just going out for rent in the next few weeks. Both really good places to place your money if you have them. Personally, which one do I favour? I prefer stocks over properties, but I do still like properties because, well, if I didn't like properties, I wouldn't have 2 properties to start with. But they're also a good investment to be making, and I'll talk about what I think about each one as we're going through the video. So let's start off. So stocks. Stocks overall are cheaper to be getting into. Let's just take let's say a good stock is about $100 per share. So you could have 10. It's not a lot, but you could have 10 shares in a cheap stock, which would be about $1,000 for 10 shares in a company. That return probably bring you, let's say the average, which is like 20%. I think 20% is a reasonable kind of amount that you would be getting. So let's say on $1,000 you get $200 return, which is like a nice steady return. So they're a lot cheaper to get into stocks, and properties are obviously you're looking at more expensive for a property. It kind of obviously depending what kind of area you're looking at, the size of the property. But properties do vary prices to price, and so do stocks. But generally, you won't get a property for $100. For $100 you can be buying shares. For $100 you can't get a property. So definitely, properties are a lot harder to get into, and you've got to have more wealth to get into there. So that's something that early on, if you haven't got a lot of money, definitely something that will be obviously more favourable is that you're able to get into stocks because they're a lot cheaper. But the return, so I'd say an average return, whatever's going on in the markets, is a 20% return. I think the average right now is 12%, but I think certainly I would expect at least 20% from the stock market as a return as the year goes on. Realistically, I put 20% down, but if I'm honest, if I got 20% from the stock market, that'd be a poor year for me. I do like to get at least 100% return in the stock market through a year. But yeah, let's just say it's 20%. That's a reasonable amount to expect. So 20% is about a good return that you would get in the stock market. Whereas probably in a property, personally, I think that unless you got a really good property for a good price and you're charging out high rent, you're probably looking at about a 10% return a year from rental income. So obviously the returns are a lot less than what you would in the stock market. But at the same time, the returns in the stock market will change on you as an investor and how good you are. And also the stock market can sort of change how much that return will be, because obviously it's easy to get a good return if we're in a bull market, and obviously a lot more people would struggle in a bear market to make money if they don't know what to do. Obviously if you're a good investor, you probably will be easily making money in a bear market. Property returns though are about 10%. You're always going to get them at the end of the month. As long as you have a tenant in the actual property, that return is always going to be there. So it's a pretty safe return. Whereas we're talking about here, stocks, you're a lot more risky because you can't really predict what your return's going to be. Obviously you hope it's going to be good, and more than likely it is going to be a good return. Whereas in the property, at the end of the month, that's what you're getting. So definitely property is a really safe option. It's a good investment where the prices will always go up in properties. They're always going to be worth more money. Stocks, you definitely get a bigger return, but obviously it's a lot more risky. If the stock market crashed, obviously you'd lose a lot of money straight off the bat there. whereas a stock market crash would never affect a property. Obviously because it's got nothing to do with it, but it's just safe. These are a few things that in property, like repairs, they could be a bit of a problem. If the housing market has a crash and all the property values come down, but as always, like stocks, they always go up. So that's not something that I would worry about too much. So yeah, definitely what I recommend from my point of view is that stocks is the better return, but I would have some property in there if you can afford it. But if you can't afford property, stocks is definitely the way to go with any money that you are able to invest. You can get good returns from stock market. Both of these you get bigger returns than what you would with just having your money sitting in a bank. At a younger age, definitely get into stocks. When you get a little bit older, if you can afford to go into the property market to just verify your have different things in your portfolio, I would recommend that as well. So guys, that's my opinion on stocks versus property. Give the video a like and I'll see you on the next video.